Hey there, dividend growth stock investors. Colby the DGI Crab here, and I had a question down in the comments that I thought deserved a bit of a longer explanation here. And the commenter wanted to know why I chose Altria Group, stock ticker MO, instead of Philip Morris, stock ticker PM, as the tobacco stock of choice when I put together this channel's list of 60 high quality dividend growth stocks to focus on. If you are new here, this channel does just cover 60 dividend growth stocks, and they are split into 4 separate categories or tiers based on the age and time horizon of the investor, which I believe is the most important metric for a dividend growth stock investor to take into consideration. MO or MO, they are in the tier 4 group, which I've designated for the 54 and older crowd, meaning it's high yield but relatively slow growth. So if you're going into tobacco as one of your investments, a sin stock is what these are commonly known as. I'm of the opinion that you're going to want to be in your older years due to the idea that most tobacco stocks are going to be high yield but very, very slow growth, which makes them ideal for the older folks out there that aren't going to have as much time in the market to let the really high dividend growth stuff like Visa and Microsoft, Parker Hannifin, etc., really snowball and give them some serious yield over the long haul. I'm not a professional financial advisor, so I want you to do your own due diligence before you decide on any stock, whether it's Mo versus PM or anything else. I'm just a guy here on YouTube that enjoys purchasing and holding stocks in the long term to reach financial freedom. So, in case you guys weren't aware, back in about 2007, I believe it was, or could have been a little bit later than that. You guys could fact check me on that. I don't have it right in front of me. Uh, this was one entity, Altria Group and Philip Morris, and then they split companies basically and went off in separate directions. So Altria, MO, the one that this channel covers in its portfolio, retained its U.S. focused tobacco operations, which are increasingly subject to stringent legal or litigation and political scrutiny in the United States, whereas Philip Morris International, stock ticker PM, the one that my viewer asked about down in the comments, that was spun off to operate outside the U.S., allowing it to distance itself from U.S. liabilities and regulatory pressures. So that was why these two split off. So there's a lot of growth potential in international markets. PM was positioned to take advantage of higher growth opportunities in emerging markets where smoking rates were still high or increasing, and these markets also had fewer regulatory constraints compared to the US, giving PM greater flexibility in product development and marketing. So we hear a lot about how here in the United States, smoking is in secular decline. There's fewer and fewer people that are smoking out there. The cost of cigarettes continues to go up and up and up to kind of help to cover for that. And I think the thought is that eventually there's just not going to be enough tobacco smokers in the United States for a company like Altria Group to continue to be an extremely profitable company. So the operational focus and strategic clarity among the split, what it did was it allowed Altria to focus solely on U.S. operations. So its flagship Marlboro brand and investments in areas like smokeless tobacco and nicotine alternatives, they really started putting a lot of emphasis into these alternative smokable products. Now, Philip Morris, in the meantime, could independently pursue the global strategies, including investments in reduced risk products like IQOS, pricing flexibility, and market specific innovations. So, definitely, there's a lot fewer people smoking out there. But if you guys are going out on the town at night, you're going to bars or clubs, or you go to the casinos or anything like that, you're still going to see a lot of people smoking cigarettes. They're, unless you're in a casino or something, they're walled off into like a little hole somewhere. they're hidden away from most of the general public. However, something that I have noticed quite a bit is there are a crazy amount of people smoking on these alternative products. They're vaping. I play at a poker game here in town with a bunch of friends every other Friday night, and about half of that table is vaping. There's a few smokers there who will go outside every so often and get a quick cigarette in, but a lot more vapors are playing at that game, and that is something that I'm just seeing a lot more of across the board, just personally here. And you know who has their fingerprints in that? Altria Group. So the point of the split was to try to find a way to unlock more shareholder value. It put investors like me in a position to be able to choose exposure to either the mature, cash generating US market in Altria Group or the growth oriented international market in Philip Morris. Each company could be valued more appropriately by the market based on its individual growth prospects and risk profile. So overall, why Mo over PM? So if tobacco's in secular decline, I want to get my yield out of it right now. Just in case I'm wrong about the profitability of vaping and all of that stuff, I want to be able to get that yield now, because if 15, 20, 25 years from now, the critics of Altria Group are correct, I will have collected quite a bit of dividends in the meantime. So overall, I'm going to be okay in my position. Now, the Philip Morris share price growth is certainly really nice. That stock is up quite a bit over these last few years. So the spinoff into the international market has been really good for that particular stock. But the lower yield and the yield growth, they're just kind of unappealing to me right now, particularly in the tobacco industry. I'm just I just don't view tobacco as a great growth play. I would rather my growth plays be in tech and industrials in particular, maybe in communications as well. And finally, I am going to always defer and prefer access to the U.S. market over the international market. Nothing against all of my international friends out there, but in the United States, this is the market. This is the market that everybody wants to get into. And even if it's an industry that's in a bit of a decline overall, we've been hearing that smoking's been on the decline for several decades now. But Altria Group just continues to pump out a really nice yield. The share price has had its ups and its downs, but it's been pretty consistent. Right now, it's up a bit overall, and it has been pumping out a great yield. On the lower end, about 6%, and on the higher end, it's gotten up to about 10%. The last time I personally purchased MO stock was about a year and a half ago, when the yield got up to the 10% range. I bought some shares of Altria Group, and even though I'm not in that tier 4, 54 and older category, it was undervalued enough at the time where I just decided, hey, my yield on cost just going in is going to be 10%. That seems ridiculously high. That's what my strategy is when I buy any of my growth stocks. I'm looking for that yield to be a good solid 30% or more higher than the 4-year average yield. That's what was happening with Altria Group the last time that I bought it. It didn't stay down quite that low for very long, so I didn't have time to do a whole lot with that. But the shares that I did buy, as I said, I got a starting yield on cost a little above 10%, and that has been treating me quite well here over the past 12 months. So that's the video, you guys. That's where I fall on the Mo versus PM discussion. Which one do you guys like better? Do you invest in either of these two stocks, or do you stay away from them? I'm not averse to the quote unquote sin stock. I know smoking is bad for you, but there's a lot of things that are bad for you. Fast food's bad for you, so do you not buy McDonald's? Bombs are bad for people, but do you not buy Lockheed Martin? I mean, I'm not going to make fun of anybody who doesn't want to invest in something for a particular moral or ethical reason, but also just something to keep in mind if you are investing in ETFs like VOO, VYM, SCHD, SPYD, all of those ETFs. are going to have are going to have altria group in them, absolutely. So you kind of can't avoid it one way or the other. But let me know what you guys think about all of this stuff, and email me any questions that you might have to dgicrab@yahoo.com. I would love to hear from you. And finally, I hope that you will like and subscribe, tell your friends, and hit that thumbs up button and all the good YouTube buttons there for me. It really helps out the channel. Talk to you next time.